The following program is a presentation of the Options Insider Radio Network. For more programs, visit www.theoptionsinsider.com or search for Options Insider Radio in iTunes. And now, it's time for the show that breaks down the options market. From unusual activity alerts to market updates and trading strategies. If it involves puts and calls, then our all-star panel will break it down. It's time to hit the Option Block. With your hosts, Mark Longo from theoptionsinsider.com, Mark Sebastian from OptionPit.com, Mike Tusaw from KnowYourOptionsInc.com, and John Griegas from Options Express.
Welcome back to the Option Block, and I hope all of our listeners out there are having a fun time trading these yo-yo markets. We're up, we're down, it's the greatest of times, it's the worst of times. It's a fun time to be out there in the mix, as they say. My name is Mark Longo, and I am your host for this fun frolic through the world of options. And allow me to apologize to any of our listeners in advance if you hear any tumult outside our offices. We are not indeed under attack, but we are apparently at the site of some very large immigration protests here in downtown Chicago. We actually have a double whammy of anti-sound setup today because we also have a lot of construction going on outside our offices as well. So luckily we are 13 stories up and our studio is buried deep in the bowels of the building, so you shouldn't hear much. But if you do hear any screaming or shouting, I am not attacking Uncle Mike Tusaw off the air. It's just the immigration protests. And speaking of Uncle Mike, I am joined by the usual cast of characters, sans one, but we will start it off with the man from the mountains himself, Uncle Mike Tusaw from Know Your Options Inc. Uncle Mike, how are you doing this fine Thursday afternoon?
Doing well. Trying to not slip with all the oil news going on.
So I know you're a big fan of taking bathroom breaks. Were you able to take some breaks today, or have you been holding it all day?
I must confess it was a little bit harder today.
Yeah, today's not exactly conducive to bathroom breaks. These are the kind of days when I was on the floor where there'd be no lunch, there'd be no nothing. They were not the most pleasant of days from a physical comfort perspective. Let's just say that.
Well, you know, the good news about this day and age, if you got a wireless laptop or something along those lines, hey, when they say that your career's in the toilet, sometimes that's not exactly a bad thing.
Note to all of Uncle Mike's clients, he manages your accounts from the toilet. Just keep that if you sign up for him. That could be a new marketing push for Know Your Options.
No, you got to spin it better. Say the markets never sleep, the markets never leave. He even goes to the bathroom thinking about your money. That's how you say it.
I just like Uncle Mike. He manages your accounts from the toilet. And, of course, we are also joined in our rotating Options Express chair by none other than Tim Nababi, good old T-Nob himself. Mr. Nababi, how are you doing this fine Thursday afternoon?
I'm very good, Mark. Thank you very much for asking, and thanks again for inviting me to the show today. I think I was busier than a one-armed man in a wallpaper contest or something like that. Is that how they say it? Yes, exactly. This was one of those days where you just don't leave the desk. A customer was saying, well, you know, I was buying it at 140 and, you know, selling it at 150, but he was talking about the time of day. And I said, sir, I don't even know what time it is right now. you know, you have to give me some prices to work with here. So, yeah, extremely busy.
Well, I'm looking forward to hearing all the fun stuff then you have to share with us from today in the Express Block and throughout the show. And the greasy meatball is on assignment, as they say, so we are a man short, but none the worse for wear, as we dive right into the trading block.
The Trading Block.
And welcome to the Trading Block. This is the section of the show where we discuss what's going on from a broad macro perspective, as well as what's happening with some of the individual names we may be watching. And as you can imagine, today was the down day on these yo-yo markets that we've been experiencing lately. We saw some significant action in all the major indices, and actually most of the major indices seem to break through some significant technical and psychological levels today. S&P closed at 1295, down nearly 25 handles, broke through the psychological 1300 level. The Dow closed down 228 to 11984, so they broke through the significant 12,000 level. Nasdaq down 50, almost 51 handles to the 2700 level. I don't know intraday if they broke through that or not. They very well may have. And VIX cash up 1.67 points to 2189. So a significant reversal of the gains we saw yesterday. Of course, if you have been watching the markets for the last few weeks, you might feel like you've seen this movie before. We go up, we go down, we go up, we go down. We took back a little bit more today than we gained yesterday, though. So the bears had a little bit more teeth today than the bulls had horn yesterday. But yeah, a lot of things were moving the markets down today. We had some rumors coming out of Saudi Arabia that the Saudi police were firing on some of the early protesters and crowds that were gathered in their squares. And there's a lot of back and forth on whether that's true or not, but of course it doesn't really matter. The rumor is all it takes to drive the markets down. At the same time, those Saudi rumors came on the heels of increased concerns of our old sovereign debt fears over in Europe, with Moody's downgrading Spain's government debt, which of course hurt the market even more. At the same time, triple whammy, we have China reporting export growth was the slowest since 2009 in February, compared to a year ago. So as you can imagine, those three bits of information combined to 1, 2, 3 really hurt the market. And, of course, crude oil edged up today and really regained much of their losses. Uncle Mike, I'm sure you were watching crude oil quite a bit today. So what was the day like from a crude oil perspective?
Well, once again, like you said, going to the bathroom was probably not a wise thing if you wanted to see it all. What I thought was really interesting with crude oil today, a lot of it, if you look at the 1-day chart of crude oil, a lot of the downturn kind of came before the market actually opened today, or before the cash markets actually opened today. We actually had it was going down while we were all sleeping. Not that I ever sleep. For those of you that are clients of mine out there, I never sleep. I constantly watch the markets. But
he even sleeps on the toilet, ladies and gentlemen. The man is a machine.
We never stop. But what was interesting about it, a lot of the downturn came in the morning, and then it came a little bit more in the earlier parts of the morning, and we bottomed out around 10:45 Chicago time. And then it just kind of puttered around a little bit at 101.5. And then right as the rumors came out about the shooting going on in Saudi Arabia, we spiked up quite a bit, actually. And what I thought was pretty interesting about that is that it still didn't spike up above where it was 12 hours beforehand. So with that, does that mean that maybe tonight's going to be a non-event over in Saudi Arabia? I'm not willing to go out on a limb and actually say that, but I'm actually surprised that crude oil didn't go up more based on that information, as well as what was happening in Spain and China and the other information out there. So I figured that crude oil would go up more, but as concerned that I was of this event tonight, driving crude oil up to 200 overnight, not that I was concerned of it going to 200 overnight, but up significantly, I'm less concerned now than I was 7 hours ago.
Yeah, I have to agree. I was mildly surprised myself as well, given all the upside talk we've been hearing about oil and all the concerns that I assumed the minute we heard of any unrest in Saudi Arabia, the oil would just be off to the races. And the fact that it did a bit of a bounce, but it was a relatively reserved bounce. It wasn't, straight up to the upside as a lot of people expected. That does perhaps bode well for the outcome of this rally or of this protest, and maybe if the protest is mild, that we won't see the explosion, and we perhaps might even see a sell-off after all the buildup we've been hearing about this day of rage and day of rage. If it doesn't materialize to some enormous extent, and we aren't seeing essentially war in the streets of Saudi Arabia, we might see oil actually take a bit of a pullback. What do you think about that, Uncle Mike and Tim?
Let me just shoot in here real quick, and I'll let you get back. I liked your analysis there, Mike. Yeah, I kind of agree. From everything that I hear and have heard, over the last few weeks before, the market started to rally on some of the Middle East news was, the supply of oil was really not a problem. So, what people are saying now is really that this is all fear. And I've heard that a lot. I've heard it over and over, several different places, reading it, seeing it on TV. So, I agree with you. Any kind of, I think, sort of calmness that may occur, or if our expectations aren't met, to the worst, then I think you probably can see crude, starting to reach some support, or starting to head towards some of those support levels.
Yeah, and the other thing, we're at a key point with oil, in that we do have the psychological 100 number right there. And going into today, I will say this, like for tonight's purposes, I did get out of a gold covered call a couple days earlier than I normally would have. So I am still a little bit wary about what could possibly happen tonight. But I'm a lot less bullish on it now, like I said, than I was 7 hours ago. For this to actually, for oil to actually go up, like a lot of the fearmongers are saying that it might, we're going to have some serious stuff going on in Saudi Arabia tonight, in my humble opinion.
Speaking of the other commodities, the metals particularly, we saw some downside or some downward movements in those. I'd imagine the bulk of that being the result of China's slower than expected growth numbers. So are you revising any? You said you got out of the gold covered calls. Are you doing any other changes to your positions ahead of some of these numbers? Everyone has said for ages now, for months now, that the demand out of the emerging markets, China and India in particular, would just there's a stable, if not insatiable, demand coming out of those countries for the metals. And so that's what the bulls have clung to for the last year at least. So now seeing that the demand may actually slow coming out of China, are you taking that number to heart at all? You think that's just one in many indicators, or are you readjusting off the metals? Because it looks like silver was down about 2.5% today. Gold, GLD anyway, closed down over 1% today. So a little bit of a pullback on this news anyway. Not particularly dramatic, but somewhat of a pullback, which any pullback in these metals these days is significant.
Yeah, agreed. No, I think that I guess I'm more of the school of thought that that's one of several numbers. I'm still a dollar bear. I'm still of the school of thought that as long as we keep printing money like we are with the government, I don't see gold and silver going down anytime soon. Now, once again, as always, though, I could very easily be wrong in my assessments of things. That's why I want to emphasize the importance of hedging these things or just taking smaller positions. If I would not put anyone in, unless it was a small position, I would not put anybody in just straight long GLD or long SLV, just because of the fact that there's a lot of volatility involved. Once again, if it was a small position or a smaller account, yeah, okay. But I think that when you're playing with larger amounts of money, the importance of hedging is paramount in commodities like this, just with everything that's going on in the world.
And I guess to round out our trading block, we can talk about some of the tax names, but we'll save that, I believe, for the odd block. But we have talked about the automotive companies in the past a bit, and GM was down a little bit today, about 2.5%, apparently off news that their CFO is heading for greener pastures. So that seemed to have dragged down GM. And Ford, I think the rest of these auto names kind of just fell along with the market. Ford down about 1.5% today to hovering around that critical 14 level. So yeah, interesting news coming out of the auto. Of course, if we do see Saudi Arabia erupt, it'll be an interesting question how that will play out in some of these auto stocks. They make the bulk of their money even still these days in these large trucks and pickups, and how many people are going to be buying those things if oil does reach the proverbial $200 a barrel that all these fearmongers keep throwing out there on CNBC and every other media outlet they can possibly find.
I'm wondering if you guys kind of picked up on this, that it seems to me, or it seems that, most people, when, they talk about the price of the oil, they say, yeah, and, I just paid such and such a gallon for my gasoline. And then they kind of go right back to saying, okay, so where's oil? and there's been a couple people that are sort of saying, look, this is, those are really two separate things here. Yes, we have a problem with gasoline and making it quickly, and making it quickly and enough for everyone to go around, compared to the oil, where, we don't really have any issues or news on, supply, and, there's lots of oil around. Sure, there's some noise right now in the Middle East, that's going to probably add a little bit of a premium to it. But, don't get in your car after filling it up and say, you know what, I'm going to go buy some oil futures. If you want to do that, go buy some RBOB futures. Have you guys heard that, sensed that? What's your feeling on that? I'm just curious, because I kind of think that that's really where sort of, some interest is coming from in, the price of crude oil, is from people, and listening to news and, making news about the price of gasoline when, they really are two separate issues. And yes, that crack spread is very expensive. And that's because no one wants to have, any refineries around them. So we're not building any, and, so here we are, struggling to make some gasoline. But it's really not crude oil that's, the problem.
It's interesting. It always seems to come back to the pump for the bulk of the audience on this. How does this play out at the pump? I actually read a very interesting breakdown the other day of really parsing the different blends that come out of the various areas that are in tumult right now, and kind of pricing in the blends coming out of Libya, which are predominantly, I believe, a lighter, sweeter crude with less sulfur, and which areas of the world actually use that, and we actually don't use that much of that type of crude in the U.S., and a lot of our refineries are not equipped for those, versus what comes out of Saudi Arabia, which is a heavier crude with, I believe, a lot more sulfur added, which our refineries are equipped to process. And it was a very interesting breakdown of how that works. I may indeed have that backwards, but I'm not an oil trader. But it was interesting nonetheless to see something like that. I think that kind of information should be disseminated more often, especially the people who are on the retail end and who are worried about how this crude pricing will impact them at the pump. There actually is a very large lag, large lead time, a large number of obstacles and steps between that crude oil barrel and actually the refined gas that comes out of the pump. And that gets to what you were talking about, the number of refineries we have, the distribution methods of that gas, the different blends. They start bringing in the spring and summer blends with the ethanol in them and everything else like that. There's a lot that goes into that price at the pump that I think some of the average retail traders, when they see price of crude on the evening news, don't maybe weigh all of those factors into their decision. Kind of like the people spouting off about $200 a barrel oil, same thing. A lot of fear mongering, a lot of fluff, and not a lot of fact.
Well, I'll tell you, the way to do it is if you're a constant fear monger, you'll get on the air a lot just because of the fact that it gets people talking. We're talking about $200 crude oil now, and none of us are fear mongers. And then the best part of it all is that if you're right 1 out of 8 times, you can say for the rest of your life, I predicted the crash of 2008. And then you have business the rest of your life. You may not know what you're talking about, but it's a great way to succeed in American capitalism.
Yep, CNBC is a testament to that. Just watch it any day and you'll just see nonstop spewing of fear along with other quality nonsense on a daily basis. This show brought to you by our good friends over at CNBC. And with that, I think we're going to close out the old trading block and roll right into the odd block.
The odd block.
And welcome to the Odd Block. This is the section of the show where we discuss the interesting and or unusual options activity that's lighting up the tape today. And we're going to kick things off with Jackson Hewitt Tax Service, ticker symbol JTX. They closed at 74 cents, down 51 cents or 41%. Just not a good day to be long JTX. This just being really wiped off the map almost after they missed their earnings by a pretty whopping margin. Analysts were expecting 31 cents a share for the third quarter, JTX reported 19 cents a share. So, needless to say, the stock just taking a hammering. The firm has actually said that they're currently working with some lenders on a restructuring plan that could actually go into a pre-packaged bankruptcy, whatever that means. So, yeah, one of these quick turnaround bankruptcies, I'd imagine. So, as you might imagine, a lot of bearish activity. This is the name that does, at least recently around earnings, has done about 1,000 contracts a day. That did over 6,500 today. Of course, some people would ask, what do you need options for in a 74-cent stock? But
you read my mind.
Exactly. But with as you can imagine, the bulk of these were puts, and people were just specking that JTX is going to zero. We saw a lot of in-the-money put buyers with front month as well as April. So a lot of people thinking that this JTX is not going to rebound from this anytime soon. We saw 500 March 1/2 puts going up for 75 cents. And let's see, so that strike closed out with about 500 on the day. And then we saw another 270 of the March 1 puts, March $1 puts going up for 26 cents a piece being picked up on those. So those are pretty much at parity right now where the stock is trading. We also saw a lot of volume on April. You can pick up the April 1 puts for 30 cents. So if you're going to look for April versus March, I would definitely get the extra month for 4 more cents. And 2,200 of the April 1 puts went up on previous open interest of just less than 500 contracts. The bulk of those puts are picked up for about 30 cents. So, about a 4-cent premium to pick up April versus March. I would do that all day, I think. And looks like, these people are just expecting, not surprisingly, that this bankruptcy will happen and that JTX is heading to the wrong side of $1, namely zero. And so, not a lot of good news for JTX, especially going into tax season. You wouldn't think that a firm like Jackson Hewitt would be struggling, but it seems like it was bad news all around in the tax preparation sector today. I believe the H&R Block also reported bad third quarter numbers, and they blamed a slow industry-wide start to tax season that hurt their numbers, even though their shares were ended up on the day, maybe because of the poor fortunes at their competitors. Any of you guys watch this name? Obviously, it was a $1.20 stock before this, so it wasn't exactly the most exciting name on the books, but it looks like it's heading down to zero pretty quick.
Yeah, I saw it not too long ago. Didn't we talk about this maybe a month or two ago at all, or no? I mean, I know we've brought up H&R Block before, but
we did H&R Block. I don't know if we did JTX. I have to go back and look through our notes. We've done so many now.
Yeah.
Maybe some of our listeners.
No, I mean, I've watched it and heard the news, and it's and I'm surprised because I passed little Jackson Hewitt shops inside of a strip mall or something, and they look nice, and people should be paying their taxes. Why not let a professional do it? So I'm a little surprised, but hey, I guess that's just how it happens.
Uncle Mike, is that you loading up on those 2,300 April 1 puts for your clients?
Yeah, now I have to say big fat no. This is one I'm staying away from so much it gets me nervous even talking about it. So, not a fan.
Yeah, those are fairly strong flyers, picking up March and April 1 puts for about 30 cents. Obviously, you're either right or you're incredibly wrong on those. And of course, those are relatively in the money right now. They were a little more of a flyer earlier this morning when the stock was a little bit higher. But these people are obviously taking a pretty hefty bet that this name is going to zero. And
it's not like that's when you can adjust into a butterfly or a spread or anything like that at those levels.
Yeah, exactly. It's not much nuance, not much adaptability to these positions. You're pretty much picking up those puts and they're going to $1 or they're going to hang around where you picked them up for if the stock stays here, or they're going to go to zero. There's not much else you can really do with those. You can't leg into something else. You can't really spread off your risk. It's kind of just pick them up for 30 cents and roll the dice. And hopefully the stock goes out before you have to have those puts expire worthless on you.
Yeah.
And then we're going to shift gears and head over to Sprint Nextel, good old S. They closed at $4.90, up 20 cents. So this is the name that does about 33,000 contracts a day. They did over 100,000 today, 107,000 actually. And we saw a lot of, not near-term, but kind of medium-term bulls coming into Sprint, picking up a lot of May premium. We saw a lot of activity on the May 6 strike. These are where about 21,000 May 6 calls changed hands. The previous open interest on this strike was about 7,500, so a significant amount of opening paper. The bulk of these calls, about 18,000 of them or so, were picked up for about 8 cents. So relatively cheap out of the money calls. Sprint trading around $5 now, so these have a little bit of way to go before they're in the money. And we also saw, let's see. Yeah, that's the bulk of it. We just saw pretty much large positioning on the May 6 strike. Looks like a lot of this is positioning ahead of earnings. Sprint has the earnings in May. Actually, no. Sprint has earnings on April 28th, so these options will have earnings premium built into them. So it looks like someone is taking a pretty heavy flyer that Sprint is going to rally north. That's kind of an interesting bet these days with so much other news being made by other carriers, Verizon and AT&T and everyone else, and everyone going on about iPads and iPhones and Android phones, and not much of that going on at Sprint right now. So maybe they're positioning that they're going to announce the Sprint iPhone by May. I don't know, but they're obviously expecting some serious upside in Sprint. Any of you guys play in the telecoms at all and look at this one?
I've been watching this because, again, I think this is something that, I do know that we did bring up a while ago. I'm curious to see what the excitement is anticipated. Maybe people are saying, it's really right here at this, resistance level. So it kind of seems like that JTX trade only to the upside. It's a, something that's not really costing that much, and just kind of taking a shot for it. And, there's been news in all the other ones. So, why not Sprint? Well, how come it's left out? Which, I've heard great things about their service. I don't know about you guys. I had it as my first cell phone, and I actually thought that they were really good.
Yeah, I had the same experience, actually. My earlier cell phones were Sprint, and I liked it. It wasn't until I switched to the iPhone, in perhaps a somewhat ill-fated move when the 3G came out, that I experienced the true quality of AT&T service, and I longed for the ability to make a call like I could do on Sprint. And I'm now on Verizon, and I'm a much happier camper. But I would go back to Sprint if they had some interesting handsets and some interesting devices on there. And that's going to close it out for Sprint, and we're going to finish up the old odd block with FTR, Frontier Communications Corp. This one closed at $7.95, down 13 cents. And we saw a lot of put volume on this name today. This is the communications company. And we saw, once again, the liquidity being concentrated in the May expiration month. And it looked like for some sizable bears positioning in May ahead of Frontier's earnings announcement, which is in May, I believe. And, we saw, Frontier is scheduled to report on May 5th. So this is another potential earnings play. We saw about 3,000 of the May 8 puts going up for about 40 cents a piece. And then we also saw some interesting volume, about 15,000 of the May 7 puts going up for about a dime. Now, what's intriguing about these is they went up exactly mid-market. So it's kind of a pick-em as to whether they were being purchased or sold. I probably would lean on the latter half of that equation and look at that this was additional bearish volume. But it is possible someone was hitting this downside strike ahead of the earnings as well and looking to pick up a dime 15,000 times. This is the name for FTR that does about 1,000 contracts a day. They did over almost 19,000 today. The bulk of it on that 15,000 lot of mid-market May 7 puts. So and if he's selling them, obviously this guy thinks there's some upside to this name. This is not a name that I follow very actively. Any of you guys watch Frontier Communications Corporation?
No, but if someone's selling those 7 puts, it's one of those trades where it's a high probability trade, but if it goes against you, it's going to bite hard.
Yeah. 15,000 puts for a dime. That's why I tend to lean that this person would probably be a little bit savvier maybe and would actually be, being particularly with so much bearish activity going up on the H strike. It would be bizarre to have a sizable, unless he's doing it 5x3. I don't know. That spread 5x3. But,
the 5x3.
The good old too soft 5x3. But, I would have to lean that this is opening bearish activity as well, and that this guy is picking up some downside, and he's joining the crowd thinking that there is some definite downside. Maybe this is the reverse. We talked about a call stupid the other day. Maybe this is
it's the 3x5 put
3x5 put stupid. Exactly. This guy wants to take a flyer and save some money, so he puts the bulk of his activity on the dime range. So there you go. You can work this into your upcoming stupid seminar or webinar. You can talk about the old 3x5 put stupid. So this is the one we'll keep an eye on to see exactly what this position is and what these traders are doing. But this also highlights some of the interesting and unusual things about options volumes that sometimes it is difficult to pinpoint exactly what the customer is up to in some of these trades, which makes it important to really, if you're trading these names and you're trading off this volume, to really parse it fully before you pull the trigger on your trades. And that's going to do it for the old odd block. And with that, we're going to roll right into the express block.
The Spread Block, brought to you by Options Express. Options Express lets you trade futures and now foreign futures too, where and when you want. From advanced charting and free daily trading ideas to automated systems trading and free educational resources, Options Express is the online broker for all traders. Visit optionsexpress.com to open your free account. Futures involve substantial risk and are not appropriate for all investors. Please read this disclosure statement for futures and options available at optionsexpress.com/futuresrisk or by calling 1-888-280-8020 prior to applying for an account. Options Express is a member of FINRA, SIPC, and NFA.
And welcome to the Express Block. This is the section of the show where Uncle Mike heads for the mountains. Or perhaps the toilet, one or the other, we'll see. And then, of course, I have sit back and sip my beverage, and I hand the reins of the show over to good old Tim Navabi, and he takes us to far-flung locales and crazy places within Options Express land. So, Tim, where are you going to take us today?
Okay, I thought I would take you to some quotes, some futures quotes specifically, because today was quite a day. After that, I thought I'd take you to some heavily traded contracts at OX, and finally just kind of finish it up with a trade recommendation, or a trade idea, I should say, from one of our analysts. So, what a day today. One of the big movers I'm looking at right now on the board that I have at this time shows sugar down over 5%, coffee almost down 5%, and then, we have some of the other ones. Some of the big movers, like in the indexes, they were pretty much well off over 2%. And, if we take a look at some of the gainers, what do you know? It's the 10-year note. And the dollar as well. So the 10-year note I show up over 2%, the 30-year up over 1%. So, those are some of the heavily traded futures contracts today. So, as you can see, a liquidation day, it was, and my nerves can speak for that, as I was on the phone all day long, speaking to frantic customers liquidating. Some of the other positions, or some of the most heavily traded positions at OX, some of the basics, some of the standards, but, that's not a bad thing. We've got SPY as the most heavily traded, and hold on one second here. SPY, the Qs, SLV, that was another big traded contract here. Some of the other ones, sorry, I'm getting a little bit of a delayed quote. In the meantime, kind of move over to, a trade idea from Rob K., one of our futures analysts here. And, he was pretty bullish on that 10-year note. His idea was basically a put spread. It was an April 10-year note put spread. He thought about essentially, buying the 16 halves and then selling the 17 halves. At the time that he wrote this, looks like there was a credit for about 10 ticks. So, it's a pretty basic position. It's a directional trade. It's bullish on the notes. It's limited risk, limited reward. And I kind of like to say what Tusaw says. Hey, it's, one of the, high probability trades. But, if it moves against you, there certainly is a lot of risk. So, you really want to keep strength, or, you want strength to stay in the 10-year note, and stay over that 117 level. So now that I've got the OX most actives back, SPY was number 1, the Qs were 2, SLV was 3, Apple 4, Netflix 5, Google, then RUT, then USO, then FCX. So there's a new one that has kind of popped up there. That one was down a little bit over about 1.25%. So that's how I spent my day here at OX.
See a lot of OX customers trading that copper and gold name as opposed to doing, I guess, GLD outright or some of the other names. They like this combined index, I suppose, instead.
Go ahead.
You see a lot of activity in this FCX regularly, or?
Lots. I do. I mean, that one I do see a lot of activity on that.
I would expect on a day like today maybe to see GLD up there instead of a broad-based mining play. But that the broad-based names allow you to trade. This company, for example, they do not just gold but copper and other things too. So it's a little more of a diversified metals play, I suppose, if you want to trade a variety of metals as opposed to just GLD or SLV. You'd hit this one instead. Maybe that's probably why it was lighting up the charts on Options Express today.
Yeah. FCX, it is one that I'm familiar with. I hear a lot of it on the phone. And yeah, I think some customers, when they say I'm going to buy gold, or I'm bullish on the metals, I'm bearish on the dollar, they may not necessarily say, okay, I'm going to buy something that's sort of priced to the price of gold and it's an index and it's calculated. They may say, look, here's what I want to do. I want to buy a mining company, and that's where I'm putting my money. You know what I mean? It kind of may be sort of a simpler idea to understand to some, rather than some of the indexes.
Uncle Mike, you play it all in the FCX?
No, it's I'm biased in that arena. I prefer to go along the lines of just gold or silver directly. And in the natural gas or oil market, I tend to prefer to want to go with the companies. But in the metal market, I'm definitely more of a fan of just going directly to the source itself. Plus, I get to say it's a smaller contract, and I get to say mini metals.
Someone's got to do it when the greasy meatball is away.
But it may appear on our boards a little bit more. Kind of just looking at some of the levels that it's at and where it's been. So we're getting close to that 200 day. So we should see what's going to happen around there. And that's pretty much it for me in OX.
Well, thank you, Mr. Navabi, for that glorious trip through OX land. And
any
with
questions or comments, rebuttals?
No. I think we got the gist of it. All right, and that's going to do it for the old Express block. And with that, we will roll right into Around the Block.
Around the Block.
And welcome to Around the Block. This is the section of the show where we discuss what's on our horizon for the next few sessions and rolling into the old weekend. And I can't speak for Mr. T-Knob or Uncle Mike, but I can't imagine much else looming on the horizon much larger than the Day of Rage, which should be getting underway as we speak, I believe, over in Saudi Arabia, if all goes according to plan. And we'll see if those rumors we've been hearing about gunfire in the streets of Saudi Arabia are actually true, or if that somewhere in the 30 billion range, 32 to 37, depending on the estimates you read, that the Saudi government spent to pacify the youthful portion of their population was money well spent, or if it was too little too late and they will join some of the other despotic regimes in the Middle East that have since come under fire. So yeah, I would imagine that's going to be the big overnight driver and into tomorrow morning sessions. What about you guys? I'd imagine Day of Rage on your horizons as well. Mr. T. Knobber, is Options Express paying to keep you guys? What the hell's the word? You have a sleeping bag set up under the desk, ready for the phone calls first thing tomorrow?
For the Day of Rage? No. Yeah, that's interesting. I mean, who knows? I mean, how busy it can get or not. But yeah, no. So we don't have any, no special alerts here. But, a couple things that we do have, would be some recordings, some event recordings, some webinars, some things like that, so that, when opportunity does arrive, you know exactly what to do. So, if I take a look at some of our events that we have going on in the future coming up, what I see here is looks like there is a ratio spread webinar that is coming up on the 13th of March, and that's at 9:30. Option time frame selection. I kind of like it when they do something, sort of not necessarily just talking about a strategy, but sort of, give other ideas or, why you may want to choose to trade certain time periods. So, those are two of the events, two of the webinars that I'm excited about. That option time frame is on the 14th, and that's at 9:30. Excuse me for that.
What about you, Uncle Mike? Are you going to be locked to the toilet with the laptop tonight, watching the Day of Rage?
Oh man, you bring up the toilet. That's one of the things I'm never going to hear the end of. But yeah, tonight I'm definitely watching. I'm definitely going to be having my Options Express streaming quotes going to see what's going on with the price of crude and the E-mini and just some of the typical things that I watch, and might sneak over to the computer a little bit more than usual tonight. But the other thing that I'm looking at right now that I think is kind of interesting is copper. Copper just is below 425 right now, and it's had some pretty strong support at the 425 level. And let's say, for example, that everything is awful and the whole world's going to come to an end. Well, theoretically, gold and silver, the precious metals, would increase in value, and one would think that perhaps the base metals might pull back a little bit. The metal money from the mini metals and the metal money, sorry, couldn't resist. The metal money might be drifting away from the base metals and into the precious metals if such a thing happens. So there's a lot going on. You don't know, but the thing that is definitely interesting is that copper had some pretty nice support around the 425 level, and it closed below it yesterday, and it continued to go down a little bit more today. So the continuation of copper is the other thing that's going to be up on our radars.
What kind of news do we have tomorrow? Anything? Looks like retail sales, Michigan sentiment, and business inventories. Huh?
Yeah, the calendar has some stuff on it, but I would imagine, like I said, the bulk of the movement up or down is going to be either, this thing's off to the races and there goes oil and there goes the market, or it's vice versa. This thing was just a huge bust. Given what we saw with oil today, and just whenever something has this much build up, I always tend to lean on the latter half of that, or the sold contingent, where it can't possibly live up to the hype. Unless Saudi Arabia is in civil war by this time tomorrow, I don't see the dire predictions we're seeing floating around out there coming to pass. That, we might see a bit of a pop in oil, we might see a bit more downside in the S&P and the broad markets, but certainly not to the ridiculous levels that people have been talking about.
I'm glad you brought that up, Mark, because, I was actually going to ask. I was going to ask, if you can, say it on the air or not, just your personal thought, or something close to it, on what what may or may not happen, or how much is really hyped. So
there you go. I'm on the record now for all time. So if tomorrow Saudi Arabia is burning and oil is at 250, people can play this back and mock me. But there we go. I have put it out there. So you were the one
selling those 200 calls on oil. That was you.
I did a size 1x20, the 100, 200, 1x20 in oil. And so, yeah, I have significant interest in keeping it below the 200 strike. But, yeah, I mean, there is some stuff tomorrow. There's retail sales, Michigan sentiment. All of those in a typical day would be market movers, I believe. Of course, like I said, with retail sales numbers, unless they're way out of line, unless business inventories are way out of line, I don't think any of those are going to really drive the attention away from the potential oil calamity that could unfold if the dire predictions are correct there in Saudi Arabia. And of course, from the beginning, whether it was Egypt, whether it was Libya, whatever country it was, even Tunisia, when the unrest really first started, the speculation is always focused on will it spread to Saudi Arabia? Will it spread to Saudi Arabia? And now that it's finally might be there, we've been talking about that on this show for at least a few weeks, if not longer. Right. And now that the unrest is potentially finally getting there, that will be where the rubber really hits the road. And that's obviously our main oil exporter in that region and our main partner there. We just signed, I think, some ridiculously large, I believe a $50 billion arms deal with Saudi Arabia, the largest arms deal on record. So we do have a lot of vested interest in keeping that regime afloat. And so it's interesting to see what will unfold tomorrow. Like I said, I do believe this is going to be a non-starter. Maybe it will kindle something for down the road, and some of the flames of unrest will start creeping out through the kingdom. But as for tomorrow being the day that topples the monarchy, I just don't. I had a lot of hype on that one, I think.
Yeah. I thought about it not too long ago. I said, you've got some, unhappy people in some of these Middle Eastern countries, what would satisfy them? And then I thought about it. I'm like, well, what happened here and what has satisfied us? Well, just start printing money, right? I mean,
solution to all of life's problems.
Well, the Saudis are trying that.
It works real well here.
Yeah. The Saudis are handing their people actual money that they have. They're not just printing fake money like us. And so that we'll see if that actually works. Of course, I think a lot of this too, like I said, it's the same phenomenon with the VIX. The term fear index really is fun to say, and people love to bandy it about on shows. And Day of Rage falls into that same category. It's just fun to say. It catches the imagination. It's a great headline. Oh, Day of Rage coming up in Saudi Arabia. So whoever coined that term, whatever Middle Eastern marketing genius came up with that, well done, sir. You've done a bang-up job. You can come work for me any day. But so I think a lot of this, like I said, this is marketing more than a lot of sizzle and no steak. What do you say, Uncle Mike? Put you on the record as well.
Yeah, I mean, I think just after seeing today in the news announcement that the oil did not just go straight up to 110, that kind of makes me think that it might be a non-issue. It would be real interesting, I guess, and let's go back in time, since it is Friday right now and everyone's listening to us saying, boy, those guys sure hit the nail on the head, or gosh, those guys were a bunch of idiots, one of the two. But the one thing that you could do on this is that if you do think it's going to be a non-issue and oil's going to stay around the same level, there'd be a lot of opportunities to do some types of calendar spreads or diagonal spreads and just sell the front month premium. And there's a lot of higher front month premium right now, or at least as of a few hours ago there was, if you wanted to trade on that.
Are you talking in USO? Are you talking in the big future options?
I was just looking at USO just because it's a little bit simpler. Now, I typically don't do a lot with USO, but the bigger crude oil would be my preference. But unless you want to trade with some real dollar, I mean, it's a lot bigger contract. So, I was just looking at USO, and that was one thing that I was noticing.
Yeah, Tim, I noticed you said USO was in your top 10s today as well. Is that a name that a lot of your customers go to in lieu of hitting the big future?
Yeah, when you can't play in the tall grass with the big dogs, you head over to the USO. And in fact, I spoke to a customer, I think it was last week, who is a pretty big guy. He has a couple accounts here, some pretty good size. He knows exactly what he's doing. He's a good money manager, and he just kept going at me. Give me oil options, and I kept throwing out every single symbol. He kept mentioning futures. So. Finally, I said, is it the USO? And he saw it, and he said, that's exactly what I was looking for. So it's one that is traded heavily here. I think it's one of the better commodity, / security contracts that are out there. I don't think there's too much of a roll risk in the USO, and like Mike had mentioned, some of those trading ideas, You can also too just keep it real basic, real simple, something very directional, and buy a put spread, sell a call spread. There's weeklies on these, so the day of rage there will be plenty of opportunity in short-term options tomorrow.
I know we discussed USO at length in the past, so I won't belabor it again. And its value as an oil indicator, it's kind of seems like it's almost a lesser of two evils type of approach of people picking USO because there really aren't any better options out there unless you really want to dive into the big future and the big futures options. So it's kind of a shame that there isn't a better ETF alternative like a GLD or SLB that people can turn to for oil. For now, USO is kind of the best of a pretty paltry lot. But hopefully we'll get something a little bit better, whether they can track the crude or directly or something along those lines, as opposed to some of these indirect measures like USO. I'm always leery of recommending people, hey, go into USO because, it isn't the pure play that people like to envision it is. And that could lead to some issues, especially if you're doing some tight spreads and that sort of thing, where these numbers are actually going to settle versus where the crude is and vice versa. So. Yeah, we always tell people it's probably one of the best of the worst options, but it isn't by no means our first choice for diving into oil. But
micro oil, we need it, CME.
Yeah. Next time I head over there, I'm gonna tell those guys, hey, they're always on me about how to generate more retail interest in their products. That's a no-brainer right there.
I did take my first E-micro gold order. You guys know which contract I'm talking about? It is one of those.
That's the new one. That's the new one they just launched, right? A little while ago.
Yeah. I mean, I was so surprised to see that. I had asked the customer. I said, well, what made you choose this one over some of the other minis? And he kind of looked. He kind of said, well, what are you talking about? And I said, oh, okay. And it's a real nice size contract. I mean, I think the initial margin is somewhere in the neighborhood of $600, where I think some of the other minis are still, over. Maybe over 1,000 or something. So, but the customer seemed to like that contract. He said he's a smaller guy. He, has an idea about where price of gold is going, and was placing orders with me. So,
now, correct me if I'm wrong. I don't believe those are just futures right now. There's no options.
Those are just futures. That's correct. Yeah.
Yeah, but no options. I can imagine. And once these things take off, I would imagine the options would be the next step. Hey, I'll be down in Florida next week with all these futures guys, so I'll be sure to put that idea forward that we need more bite-sized retail contracts with options on them, please.
I think actually that's probably the fastest I've ever seen a contract sort of get initiated to where all of a sudden, Robert Smith from, Iowa is trading it, maybe other than like single stock futures when they came out, but then those died pretty hard. So, you know what I mean? Usually they take some time, some interest, this, can be months. This one I think was relatively quick.
Yeah, maybe we're onto something.
So. Yeah, this is a big initiative for those guys over the CME. They're really trying to, ETFs and ETF options have really been eating their lunch in the retail space for a long time, and they're trying to figure out ways to fight back against that, and this is one of those ways, and I think this is the beginning of more of these contracts we're going to be seeing, and hopefully they can get them on a quick turnaround thing. Looks like I'm looking here on the website for these right now as they're talking. Looks like they waived all the COMEX fees and everything associated with this contract for the first 6 months too, as a way to incentivize some volume. So they're taking some of the right steps. Now we just got to add some options on these guys, and we're all set.
Yeah. Yeah, because, people do call up, they say, I want gold futures, I want oil futures, and they find out later in the conversation they can't afford them, and there's, nowhere else for them to go except the GLD or USO. So
I will say this before we head out. I'm looking at the numbers on USO. It averages 121,000 contracts a day. In the options, it did over 322,000 today. So this is a fairly liquid name. I mean, you can say what you will about its accuracy, but at the very least, you're not going to get squeezed on spreads. It's liquid. You can get what you need done out there. So that's 1 point in the USO column, I suppose. All right, and that's going to do it for this episode of the Option Block. I want to thank all of my partners in crime for joining me today. Starting off with Uncle Mike Tusaw, the man from the mountains, the defender of the stupid, the commander of the porcelain throne. Uncle Mike, what do you have going on over at Know Your Options, Inc. for this coming weekend?
Phoenix, Arizona. I'm going to be guest speaking at the Options Express event there. It's always a good time, so stop on by. I'd love to meet everybody from Phoenix. It's going to be a great day, folks. So if you don't have anything going on Saturday, stop on by. And if you do have something going on, cancel it. Stop on by also. We'd love to have you.
Yeah, and if you are a listener and you are going to go to the event, stop on by afterwards and say hi to Mike and let him know that you listen to the show, because we do like to hear your feedback. And we do like to talk to listeners, and he'd love to hear anything you guys have to say about the show or any other questions in general. And it just, like I said, we do like to hear that immediate feedback from our audience whenever possible. So if you are in the Phoenix area, swing by, say hi to Uncle Mike, ask him why he's such a fan of the stupid and all these other strategies out there. And then, of course, Mr. Navabi, you listed off a few seminars and webinars coming up at Options Express. Anything else coming up in the foreseeable future you want to let our listeners know about?
I wish the other Mark was here. He'd probably get excited about this. Volatility and Options Skew, Part 2. That's a webinar on March 15th, and that's at 1:30 Eastern. So I think that is probably something that is going to generate some good interest. Or if you hear us talking about the skew, and you get a little bit mixed up, then maybe this is for you.
And since the Greasy Meatball is not here, I will do his plug for him. Be sure to visit optionpit.com to see all the latest deals he has on his various educational and mentoring programs, and he has a number of coupon codes floating around out there you can find in our show notes for his various classes and various deals for Option Block listeners. And as always, if you want to hear more of the unusual activity or any of the news and other events that we discussed on the show today, then surf on over to theoptionsinsider.com. There's a lot more unusual activity there, a lot more breaking news and events and analysis and education, as well as other radio shows that we do in our Options Insider radio network. We just recorded our inaugural episode of our new volatility trading program, and that should go up soon, so our listeners should keep an eye out for that. That's a very exciting new addition to the Options Insider Radio Network, and there will be more new shows on the horizon after that. But thanks again for listening. I want to thank all of our listeners for tuning in and downloading and streaming and subscribing to this show. And we will see you next time right here on the Option Block. In the meantime, avoid that day of rage if you can. We'll see you next time right here on the Option Block.
Become a part of the Option Block. Just visit www.theoptionsinsider.com/forum to post a question for the hosts. You can also submit questions to twitter.com/optionblock or leave a voicemail at 312-544-9356. Make it interesting and your question just might make it on the air. The Options Block is property of the Options Insider Incorporated. All rights reserved.